It's beginning to feel a little like May 2021, but hopefully this time without the huge dump. We have the huge headlines coming out of hyper adoption in the cryptocurrency space. The Super Bowl coming out on Monday with plenty of those major cryptocurrency exchanges splashing hundreds of millions of dollars in prizes and advertising. And the big Bitcoin maxis are out again with their laser eyes. Before we get too ahead of ourselves, let's make sure we smash up the like button and subscribe if you haven't already. Bell notification icon on. Let's crack on. Now, I'm always bringing you the news without the hopium. I enjoy the hopium, but I get more hope-filled at the really stretched out lows of the market because I want to be buying as cheap as possible, not while everyone else is buying with their laser eyes on at the tops of the market. But if we take a look at some of these headlines, Wells Fargo, cryptos like internet in late 1990s, nearing hyper adoption phase. So we've got a little chart down here just to give us that hopium that we've been looking for. Crypto users right at top axis. So this is how much we have in the crypto space at the moment compared to the internet users. Now, this doesn't show any sort of drop in the users, although this period here, 2000 and 2001 was the tech wreck. So there was a massive boom and then bust. And throughout these years of prior to the GFC, the internet usage was obviously rising at that point in time. And then obviously now it's pretty much in everyone's phone on multiple devices. This is what this article is trying to tell us, that this is what will happen with crypto in the coming decades. Obviously, we're not going to get too ahead of ourselves because there can be plenty of booms and busts within this period as well. I get it. I'm always putting cold water on your hopium boners, but I'm here to make money, not get excited on Twitter with other laser eyes Bitcoin maxis. I'm not going to be getting my profits from those guys. So let's crack on with some of the other news. NY Fed, stable coins are not the future of payments. All this is really saying, whenever we see this headline, is tokenized deposits instead of stablecoins. Listen to this. The authors raise the question of why the central bank would use stablecoins if it could issue tokenized deposits. Bank depositors would be able to convert their deposits into and out of digital assets. What the hell are we currently doing? We're putting money into the bank, comes up as a digital number on our mobile phones, on our computer screens, and then we use those digital numbers and share it with someone else or send it to someone else in exchange for a good or service. So the tokenized deposits that can circulate on a DLT platform, a distributed ledger technology platform. Tokenized deposits would also make use of existing payment infrastructure. It's exactly the same thing as we currently have. So instead of stablecoins, they're looking for tokenized deposits. It's all just a bunch of words. However, the adoption is here. They're looking to adopt the language of cryptocurrency. Obviously, that's my take on the situation. You let me know in the comments down below if you think this sounds any different to what we're currently already doing with our banking system. The crypto volume reports of money coming in and out, the asset fund flows weekly report. We have our third straight week up, and the previous 2 weeks were quite low. So at least we're seeing money coming back into the space. Still leaving Ethereum at the moment, more money coming into Bitcoin, more into Solana, Polkadot, Cardano. It's not stopping the bleed, but at least there's some money coming in at this point. And as for Bitcoin, this is where the turnaround was, around late into this third week here. This is the drop week at the low of 36,000. So that's where the money started to turn positive. And you can see they got a little bit of a bounce out here. We've been covering this day after day after day. We got the breakout of the downtrend. And in terms of the shorter term trend, we did break above the 12th of January. So this was around that $44,000 high. What we need to see is some closes, or are some closes above that level. So we got there, we touched at 45.5, which was the lows of all of the consolidation or the redistribution before the market broke down. So we need to get some closes back above 45K so we can start to tackle those low $50,000 areas. That's the real target out of all of this. Bitcoin is hanging on pretty well. Although I haven't got the closes up here, it has broken above the 12th and the 13th of January. Now, this is a significant turning point. So at this point, this is the significant level here. This was the first rise that we had out of this major low on the 10th of January. Very emotional period, looking for that final low before the bounce, and the market was extremely weak. We had the crash after that minor extremely minor bounce, and we've finally made it back to that level. So that's why I'm looking at this as a significant turning point for the market to reclaim, get back above so that we can test higher levels. So keep that in mind, 12th and 13th. Go and check that on your charts, any of your altcoins that you're holding, and see how it stacks up. There are some alts which are strong against their 12th and 13th dates. On the other hand, Ethereum is not, it's under it, but it has broken one of its downtrends. So that's a good start. Whereas a lot of other coins are still well and truly down. ADA's down, Solana is down. A lot of them are really under their major levels. Whereas Ethereum's still above its major 50%, and it's trying to tackle the 12th and the 13th. We're seeing this number replicated across the total market cap as well. So Bitcoin is the main one here. It's hanging on, it's holding up the market, which is a good thing. We're just failing out now at the $2 trillion level, and taking a look at the 12th and the 13th, you can see that we're still underneath that level on the total market cap. So everything, all in the cryptocurrency space. Total 3 here. This is everything excluding Bitcoin and Ethereum. And if you take a look at where the 12th and the 13th lie, they're way down from where they were. So this is just showing that altcoins, everything except Bitcoin and Ethereum, is far, far weaker. As a whole, generally speaking, yes, there are going to be the odd one or two which are looking stronger. And as I was doing my searches, going through my checklists today, sand was one of those that came up. Not saying it's a buy, but there are cryptos out there that look a little stronger than what we're seeing here. Total market cap without Bitcoin and ETH, long way to go. The number here is 870 odd billion dollars. We're currently sitting at 750. Not saying we can't get there. It's just got more work to do, and it's going to be harder to push up than something like Bitcoin at this point in time. Here comes all of the retail hyper adoption this week with the Super Bowl, and the Super Bowl is giving out NFTs, souvenir NFTs with tickets. Attendees of the Super Bowl 56 will receive commemorative NFTs alongside their tickets as part of a deal between the NFL and Ticketmaster. So there are more NFTs. The search volume for NFTs is still well and truly up there. It's above crypto. So more people are searching for NFTs than they are for crypto. We had some peaks earlier on this month when Bitcoin dumped. Bitcoin was way up there. And at the moment, everything is dropping, which we're expecting the search volumes to drop because the market is kind of boring, even though we've seen it bounce a little bit. But in terms of the pricing for FTX, which we'll be advertising during the Super Bowl, we haven't got past our downtrend, but we're sitting above our short-term 50%. Now, I think FTX will be a little weaker if we close below the $40, but the downside would be beneath the $31 at this point in time. As for CRO, it is getting back above the 12th of January. So you can see how significant this level is playing in many of the markets. We need to see a lot of these markets close above it. The 50% level is around 49 cents. But we've talked about the Super Bowl coming up, and obviously that being a major adoption week, a lot of people hearing about crypto. It's going to be plastered across the TVs. They have NFTs given out with their tickets. I would be wary, well, I am going to be wary about this being a buy the rumor, sell the news type of event, obviously because we're leading into that major news event being the Super Bowl. Speaking of NFT and metaverse cryptocurrencies, I'm giving another little shout out to one that I absolutely love. Not to say it's a buy, but the main thing here is it's holding up above its major 50% level. So this is from a major low minus this ridiculous spike in the data. So from the major low here at 50 cents to the current high of $3.33, sitting above the $1.90. This is Ghost, GHST, Avagotchi. And should we continue to hold up and hold above our other support levels of swing bottoms, this could be one of the good cryptos that might take off as the market comes back sometime later this year. But this is the sort of thing that I'm looking out for. It's not to say that you should go out and buy this thing, but in terms of a chart pattern and watching major lows hold up, major highs continuing there, 50% levels looking good, especially when the market is down. This is what I want to see with a lower market cap cryptocurrency that has the potential in the metaverse space with its NFTs. And so make sure you're subscribed, like the videos up so you see the content pop up in your newsfeed. Check out all the links in the top of the description. I'll see you guys at the next video. Until then, have more fun to get more done.